Good evening. This is the market with Odinga. I will be recording a audio only daily review for my English community. I think I will go to the site. I have just uploaded a Dutch version of what I'm going to be doing now. That is this daily review. I have just uploaded this one, and I will be going to the chart and there see what we have seen today and what we might be expecting. It is a quick daily review. I think maybe less than 15 minutes. I want to do a review with you, and maybe some along the way, some studies, some highlights, something on which I'm looking at. My up close candles are in green, open, low, high, and then close. Up close candle are green, black candles are a down close candle. There's already one thing that I need to point out. Whenever you see this gap between candle 1, 2, 3, this is the first candle, second, third candle. If you see this candle and there is this gap and it is a up close candle, we call it a busy, a buy side. Prices only be offered on the buy side. It is a buy side imbalance and sell side inefficiency. It must be made efficient on the sell side. So let's I'm using the color blue for daily annotations. And for now, price have straight till there with this busy buy side imbalance, sell side inefficiency. This gap is what we call busy. When we see this gap, price is always retracing, repricing to either the consequential encouragement, that is the middle point, middle of this gap, or trade further to the low of the gap. 50%. You can also grade the gap and see how price trade through it. We have seen that the algorithm has balanced this buy side inefficiency, imbalance, sell side inefficiency completely. So we taking it out. What we have seen today is that we have seen this the Tuesday of the 4th of June that prices open, trade first way down to this green busy, and this green busy, let me to the right. This green busy is coming from the weekly chart. I want to go and see from where we anchor this busy. This is this gap, this candle 1, candle 1, candle 2, candle 3. This gap between this high and that low is what we call a busy. And this day price have this morning, or this trading day prices traded to that busy and then reprice higher and close above the open on a close candle. Go back to the daily. Whenever I see a wick like this, a long wick or tail, on above is wick and below are tails, whenever I see a long tail like this, I always grade it. And in this one I have already graded this level 25% of the tail, 50% or consequential encouragement, and then we have the 75% of the of this gap. So what can we read from this? We are not trying to pick top and bottom. We are going to we are trading in the flow, the order flow. Price is where the normal questions that you are asking yourself anytime you sit at behind the chart is where were we recently, how strong and with conviction have we come from where we were, where are we now, and where are we most likely going. We were in this CB, this green CB low. We trade to it. We come with a strong tail above it, even above this volume imbalance. We are now here, and most likely we are going to engage this buy side liquidity about here, and liquidity about this last week high, and maybe further to that upside. We are in our non-farm week, non-farm payroll week, meaning that we have been trading yesterday, Monday, Tuesday, until tomorrow, Wednesday, 11 o'clock. I see we have 9:15 a news embargo, news high impact news driver, also 9:45 to 11, and 11 o'clock also news driver. We are going to see this news driver, the effect of it on the market. And what we like to see is that because we are assuming, we are expecting price to rally to the upside, with those news driver, we would like to see price drop to either this 25 upper lower quarter of this tail, or to the consequential encouragement, maybe to the top of this volume imbalance. That is this volume imbalance, which we have also graded. I think we can now, this volume imbalance, there is a body place on it. As long as we see this has been made balanced, so we can take it out. This one will be taken out, cleaning the chart a little bit, so that we can see there is a volume imbalance here, and from a sell side, the volume imbalance has been created, and here we have seen a body place on it. That is where it tells us the volume imbalance has fulfilled its purpose. We have seen Monday, we have seen price trade way down, did not take the Friday low, did not trade to the VIX, the 25%, but the trade way down to this one. Let me clear this one for a moment. Trade to below that, there is consequential encouragement. It is a tail. It is a tail on the monthly chart. You know that it's a tail on the market. And today, Wednesday, we've traded and closed above the mean threshold of this long wick. This long wick for us is what we'll be going, is what we have been watching this day. I had him in darker blue, and I can now take this out, cleaning the chart a bit so that we can see. The clearer it is, the better we can see it. This 4 hour. Here we have now a little bit a cleaner chart, seeing that prices trade to this weekly basic low, and really strongly leave a long wick on the sell side, and is poised to go higher. With the news in the driver of tomorrow, I would like to see price drop to the 25% of this tail, or even further to the 50%, but I like to see it leave this lower quarter open and then rally bullishly to engage these relative equal highs yesterday, Monday, and today, or relative equal highs, and if it is strong enough to reach this bearish order block and then further into buy side objectives. I already told you that whenever on a down close candle we see a gap like this, we call it a sell side imbalance, buy side inefficiency, like this one. This one is a gap between these candle 1, candle 1, candle 2, and candle 3. Here we see a inefficiency, and that a gap, and this gap, this inefficiency, we call it is sell side has received the delivery, and now buy side is getting its fill. It has been rebalanced with these trade 1 past 1, 2, 2, 3, so we can clean the chart and take that one out. You now have a cleaner chart. You now can concentrate on most recent price delivery. You see both tail have left a long tail. This one now, this one now, this one out, this one out. So the daily chart is clean, and we are looking at potentially that the market can drop with news down, and then trade toward the buy side. That is what we would like to see. Now, what is the reason why we would like to see it? If we look at the landscape, I think on lower time frame it will be more obvious. Let us go to the lower time frame, the 4 hour. If you look at the landscape, it is obvious that this low is here as an objective, and these highs together with this high make relative equal lows. What price can do is price can rally and engage them first, which is going to be something for us to consider. Engage them first and then drop to the sell side. If we lose this swing low, 1, 2, 3 candle, this low is lower than both of the 3 candles. This swing low, if we lose this 4 hour swing low, we will consider it as being a market structure shift, and from that point on we will be looking at sell side objective. On closing basis, if we lose it on closing basis, we'll be looking at sell side objective and toward the weekly equilibrium. That was in the analysis of this week, past Sunday, toward these objective. If we lose this swing low, crucial, very crucial swing low. If not, and we are looking at price to drop toward these graded daily level, the tail toward it, and then continue to rally toward the buy side and to clear these buy side liquidities above marketplace, these premium buy side, and probably also that one. Let's go to the 60-minute. The 60-minute chart is bringing it much more clearer, And here we are looking at also a long wick that already have taken a low, very significant after every before we have any significant rally, a sell side liquidity will be engaged. And here we can grade these levels also. That whenever I see a long wick or tail, I grade them in 25%, the lower quarter, the upper quarter, and the lower quarter, upper quarter, and the consequential encouragement. There we go. There we go. This and there we go. This is your daily review. We are thinking that price, with what we see, we are looking for obvious high for price to want to reach to on the daily chart. We are thinking that price will rally toward the buy side to engage those liquidity that is above this relative equal high. This feeling that has been created as if the buy side is very safe. The ceiling idea for retail, the strong resistance level, the market will make them jagged, will make it jagged and trade past it. Here we see a 60-minute SIBI. What is a SIBI? A sell side imbalance and buy side inefficiency. Whenever we see 1, 2, 3 candle and there is a gap between those between this black candle, meaning a down close candle, that is what we call a SIBI. The market can rally toward this to engage the liquidity that we are seeing there. We are seeing actually a SIBI here, a SIBI, but there is also something that is very significant there. I have already marked it. That is this balance price range, one past the another. BASI and SIBI balance price range is something to study in the theory, but it is where I'm expecting price to go when we talk about sell side objective. Let me take this one, copy, have him also there. These are objective that price may most likely draw to the coming trading day. The market will most likely give the impression as if it is going to drop. That is why I like this long tail. I'm looking for price to drop to this tail and leave the lower portion of this tail open and then rally. So I'm expecting my schematics pattern like open and drop to this and then rally to engage the buy side. We will see what it will be tomorrow. It's not a 2. I'm not hurried to take a trade tomorrow. I already reached my week target, so I'm going to be reading price and checking. If I see an opportunity, I may engage, but if it is not clear, low risk, high probable low risk trade, I will not take the trade. I will just leave tomorrow and the day after tomorrow, Thursday, and till Friday after 11. Then I may consider taking a trade. If not, then next week. And we are on the 60 minute. If we drop to the 50-minute time interval, here we see the price have been leaving some. It's interesting. Some swing low here. That is also on 15-minute inefficiency. price can and most likely may drop to this before they go to engage the relative equal high that we have now above. Relative equal highs, buy side liquidity is there. I don't want to see them taking it out for now. I want to see them taking this first drop low in a Judas swing, using maybe this as inversion drop, taking a drop down, giving the impression that we are going to go down, and then trade all the way to the 25, the upper lower quarter of this how you call it, this tail, this hourly tail, to maybe the consequential encouragement of this tail, and then rally aggressively to engage the buy side. I want to see how they will manipulate tomorrow, and then engage as we will first be reading price. Tape reading is what we are, what we want to be doing, what we want to be good in doing, and when we see our set of parameters, then we engage. I personally, this is the time frame that I trade. It's the time frame that I also mark the algorithmic. This is a swing low. Take a PM session, previous PM session. It is Tuesday 4:06 PM. PM low. Bottom left. I like to have them, and that is top, and this will be PM high. I want to see at the open at 9:30, see price first of all drop or rally, depend on where price is, rally to engage it. If price engages first, remember we already marked a 4H swing low that we would like to see taken, and there is a long range here. So if price engage this first, we'll be looking for sell side objective toward this PM low, even lower than that, and leave and maybe engage this swing low relative equal lows, and then rally aggressively with the non-farm payroll news driver. What I'm also thinking about whenever I am analyzing and reviewing the chart is trying to find out what the market maker will do, how they will prime, what they will give traders to believe. And for now, they are giving the traders buy side liquidity as a strong haven, strong safe haven, strong resistance, as if there is a strong ceiling that cannot be broken through, and it will be made jagged. If you see sell side have been traded pretty well, it will be made jagged. All I am going to see, and I think we are going to witness, is we will be looking more on price to drop from here, engineering more liquidity there, drop, and as long as it doesn't take this swing low, we are still on buy side model, buy program. For now, we can trade nimble these down move and price action. we are approaching the market with ICT concept in mind. That is what we are saying. He is the one that taught us the language, the algorithmic language. We have worked hard back testing and journaling. I'm still journaling with algo. I'm still journaling with the algorithm. I am, yes, still journaling here. By a disclaimer to all those that have been watching. And then I have conducted the high time frame analysis and have loaded. I think it is high time analysis, must be somewhere here. Directional bias solved. This is it. If you watch this video, the directional bias issue is solved by you doing this for, I think, for how long? For 3 months. Practice make perfect. I want to greet the calendar is fixed. I have covered that. Is there anything? What one can do is try to this is the S&P, the Nasdaq, and QHM. That is what I will do tomorrow. I will do a check if there is strength to continue to rally to the upside. Most likely to the upside. There are clear objectives on the upside side of the Nasdaq. In my decision tomorrow, maybe when 8:30, I may decide to trade the Nasdaq, and not the ES. Relative equal. Well, this is what this is, a balanced price range, and on closing basis we have seen respect. So we are going to the upside. Let me see what the Dow Jones is doing. The Dow Jones is also rallying. There is relative equal there. We have trade to this order block, this busy, and there is some relative equal low below these lows, but we are looking at first this one and this inefficiency and to the upside. That is what I will be doing tomorrow. As in my pre-market analysis, I will check what London has done and how London has traded in relationship to my review and analysis, and then I will wait. 9:50 we will have a news coming in, a strong news. I think a strong news coming in. I won't be trading before 9:50. 9:50. I want to see the whole calendar. Yes, 9:15 there is a news, so I will be watching it, and if I will take a trade, it will be either before in the pre-market or with this volatility, but really be nimble. If not, I will demo trade tomorrow. My weekly target has already been reached. I will demo trade tomorrow, and then or trade with micro, where micro contract where the risk is less. I think I can clean the chart tomorrow morning and trade with micro ES, $5 per point or per handle, and QM, or we'll trade this $20 for mini and micro $2 per point, and then keep on practicing my model, the delivery of my model, and how I behave in the market. For now, Algon and I want to say have a great night, and we hope that we have served you well. And then we see each other trading